These two marijuana stocks are competing for a spot in your portfolio. MSO marijuana stocks are nothing new to the cannabis industry, despite the fact that they have only been around for a few years. MSOs have seen massive gains both individually and as a larger market. Much of this is centered around legislation that has gone into place in the past few years, but aggressive expansion strategies and a market that is willing to support them have also contributed greatly. Of course, not all MSO marijuana stocks are made equal. While most tend to show better returns than pure play pot stocks, it all comes down to the numbers. Some have high debt amounts while others are posting large profits without earnings before interest and tax, adjustments, and so on. Investors should maintain the position of doing as much research as they can to decide which company is right for them. A very large MSO marijuana stock. Curaleaf Holdings Inc. is one of the largest MSOs in the industry. The company currently owns and operates as many as 30 dispensaries with 12 cultivation plants and 9 processing sites. These locations are spread out across several states in the U.S. As one of the leading MSOs in the country, Curaleaf was awarded a designation to remain an essential service during the coronavirus. This means that it has been allowed to keep its doors open with some restrictions. The company recently put out a press release stating that the designation means that, like pharmacies and grocery stores, Curaleaf dispensaries provide an essential service to communities and are authorized to remain open during the COVID-19 outbreak. The largest MSO by U.S. presence. Acreage Holdings Inc. is considered to be the largest MSO in the industry by the sheer volume of locations. With a presence in 20 states in the U.S., it has a broader reach than most other competitors. The company also exists in several of the largest statewide markets in the country, including California, Florida, and Illinois. Wall Street has stated that it expects the company to post sales of around $345 million this year. This number would represent a rise as much as 125%. Canopy Growth Corp has also been working to close on a cash and stock deal with Acreage for the hopes of an acquisition. With this in the works, the company looks like it may have an easier time embarking on this large growth strategy. In the meantime, it is still working to up the amount of locations it has even during this pandemic. Of course, the company has been slowed for full growth because of the coronavirus, but the real potential with Acreage should come in the long term. Because of this, the company remains a marijuana stock to watch moving forward.